Hello, welcome to More Money with Marty. Today we're going to talk stocks, the market, 10-year, little Bitcoin, and Russia. Let's go. Alright, so lately I've had my friends ask me a bunch of times, what do you think's happening with the market and where do you think it's going to go? How low can it go? You know, it looks like we're in a bear market. We keep having these bear market rallies. So if you look over here, you pull down, pop up, pull down, pop up, pull down, pop up. And so each one of those is a bear market rally, and they can be quite strong. But yeah, ultimately, like if we're looking a year out and maybe we are turning into a recession, what's kind of the worst case scenario? And so looking at this, first thing is zoom out. Zoom out. We're looking at years here, not days, not months. So this is a chart that goes all the way back to 2016. And as you can see, there is a trend line here. I put it in the thickest green I could on my charting software here, which, by the way, in case you're curious, is called TradingView. I have a link in the description below in case you want to learn more. But anyways, it's been a very strong trend line, and if I was to say, there's a place that I would buy with pretty strong conviction, it would be if we touch this line again. So yeah, what's the worst could happen? That's probably, in my book, what I think is the worst that could happen. So why do I think it's possible that we could actually get down there? So if you look, these bars on the right, this is your vertical price history. Okay, so we've had a lot of volume up here in this range, and we've had a lot of volume down in this range. So this right here, this is, a firm base. I don't think we'll cross through that. Like we would have to have strong nuclear war. Cities would have to be like vaporized to break this, this type of support here. So don't think that's going to happen. But the move from here down to here could actually be quick. And so I have an example here. It's not just markets that experience that. A really good example is Amazon. If you look at it, it has a strong vertical price volume right here in the range between 80 and 100. Of course, that was prior to their split, but doesn't matter. This is a lot of volume in this price range. There was a lot of volume in this price range, but you see, there actually wasn't a lot of volume in this range here. And you see what happened when it actually decided, hey, I'm going to drop all the way down here. It did so very quickly because there's just no support. There's just no buyers, right? There were buyers and sellers, but buyers on each of these dips in this area. There was no such thing here, so it cut right through it. So something to be cautious on. Now, that's the big picture for the market, kind of zooming out. Now zoom back in, and we have a different story. The market's been going down. It's on its 9th day red here. And if you look back historically, when markets go down for 8, 9 days, that tends to be an indicator that we're oversold and we're exhausted in that direction, and we tend to pop up. So here's a 9 count, pop up. Here's a 9 count, pop up. This one, just kind of traded sideways for a bit, but it's looking to me like if you put the 9 count in addition to the RSI being oversold, typically when you see the RSI down this far, here, over here, right? And then, of course, this moment right here, which is geared up for Monday. When we see this, it tends to mean we're oversold. I'm suspecting that we're going to get a candle here that'll turn the next bar gray. This is the Williams crash detector. I think this one's over. It's been kind of green for a while. You see these turn green for a while and then they reverse. So I think this move's done. So that's kind of big picture there. So let's talk some strategy. Now we're in this situation. What is something you can do here? Oh, by the way, also, this is a double bottom, potentially, right? If we move up tomorrow, this right here is a double bottom. But it's a temporary one. We are on the 4-hour on this chart here. I'm sorry, we're on the daily chart. So that means we're looking at days. So I'm thinking we pop back up for a few days, right? These moving averages are going to continue to curl down. We're probably going to hit our head on them this time, right? And we've done that before. We've hit our heads on these moving averages here. Long over here, we hit our heads. We hit our heads. Hit our heads. So this is something that happens. Hit our head right here. So these will continue down. This will probably pop up. We'll hit our heads on the moving averages. I'm not going to predict or project beyond that, but I just, that's what I think is going to go on here. And in terms of strategy, something I'm looking to do, of course, I only paper trade on this channel, but if I were looking to actually play with money, what I would do is I would probably sell a put spread here. So that means I'm selling, maybe a 270 and buying maybe a 265 here. And basically what that means is you're selling the premium to someone, you're hedging that sale so that you're not taking on infinite risk, because never a good idea to take on infinite risk. And as the market goes up, you get to collect all the premium from people that were purchasing those puts. So you're selling the puts, they're buying the puts, and that's how it works. In fact, you know what? I have a whole video I'm going to make on that, so I'll link that here to this video, and you can watch that, and it goes into depth on how you do a short put spread. So that's all for the market and the strategy. I guess another thing to look at here is the 10-year yield. So this is bonds. It's the reason why the market's going down. The Fed keeps raising rates. It's pulling up the 10-year yield. The QQQ, the NASDAQ, basically trades inverse to these bonds. So when these bonds are rallying, the market tanks, and that's just kind of how it works. People prefer to have definitive yield, which they get in bonds, to stocks. The bond market is much larger than the stock market, and so it has a heavy impact on the stock market. When yields rise, it also causes issues with risk assets. Bitcoin's a bit risk asset, and it's been hurting too. So Russia began its annexation votes today, and this isn't good. So I think what Putin's trying to do here is basically claim these lands as part of Russia. And once they've annexed these areas with, obviously the sham vote, they're just going to be like stuffing that box with, their army soldiers or whoever is voting them. They'll change the counts. It's just not real. So they're going to annex parts of Ukraine in the east, and I think this is going to be the precursor for them starting to fight the war really dirty. Now, does that mean they use nukes? Does that mean they use chemical weapons? I don't know. But I think they're going to start doing things that really are going to make the world cringe. And I really hope, for the people of Ukraine that this doesn't happen. But we really have to have, an open mind here, because Putin is crazy. He needs to win, and I think at this point he's willing to do anything to win. And if that means nukes, I think he's willing to deploy those. So keep an eye out. Certainly, if you see any random crashes in the market of 3, 5, 7%, if we start hitting limits all of a sudden on a 5-minute candle, that's probably what happens. So there you go. Let's hope that doesn't happen. It could happen. Sorry for the fuzz here. And if any of this was helpful at all, please like and subscribe, and I'll keep you up on the markets and what's going on. Thank you.